Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Polygon's Matic, taking a look at what's been going on most recently and what we would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. You'll also find links to our Patreon services and the new Cheeky community-led podcast, a fantastic podcast keeping you up to date with everything crypto on your daily commute into the office. It's available here on YouTube, it's on Apple, it's on Spotify, and even on Amazon Music. Why not check that out and stay well up to date? Guys, with all that said, let's actually make a start on the video and jump into the charts for Polygon's Matic. Okay guys, so we're going to start this off by taking a look at Matic paired up with USDT on the hourly chart, and Binance is the data source. Now if I just zoom out a fraction here, we can kind of take a look at the overall structure of what's going on here for Polygon. Okay, now we are still technically in a macro fourth wave up. Okay, we have yet to actually invalidate any potential move to the downside. Okay, so unless we cross higher, and I'll say this straight off the bat, unless we go up higher than $1.30.6, okay, so right here, this dashed line, $1.30.6, unless we go up higher than that, there is room to the downside, and a new lower low is absolutely required. This low currently, unfortunately, is mapped at mapped at 14.27 cents to 23.3 cents. Okay, so there's quite a lot of room to the downside, and the only way to prevent that is by going up higher than $1.30.6 to break out of this Elliott wave structure and prevent the fifth wave down. Okay, so at the moment we've got a 335 corrective structure to go up here, and of course if we do hit this area of $1.30.6, then this recent move upwards is basically a wave 3 on a macro scale, and there would be a wave 4 and a wave 5, and then there would also be a correction to the downside afterwards, and that correction to the downside I believe would be at least 50% of that entire structural move upwards. So you know, I think we'll come down lower than where we are right now, even under the most bullish of circumstances. The only difference is there's no need to go down into a new lower low. Okay, so do not worry about missing out on anything or the fear of missing out. FOMO right now is usually quite a bad idea in my opinion, but obviously I'm not a financial advisor. I cannot give you financial advice. What I can say is when things go up, they typically come down, and they are some really key Fibonacci levels which resonate incredibly well with these structures. So if we were to go up into a really bullish 5-wave move on a slightly higher time scale, like a 4-hour or an 8-hour, then essentially that would come down pretty significantly, 50 to 88% in my opinion, before we would go up once again. Okay, so the trick to these kind of bear markets is not to try to time the bottom, but to find the structure that basically shows us that we're reversing and that we have a confirmation of the move up, and then buy the dip afterwards. That way we can be, sure that we're not going to come down lower than the previous low. Okay, obviously a dollar cost averaging strategy is more important for most retail investors than trying to time anything specifically, which is why Chris and a whole host of other retail investors focus specifically on dollar cost averaging, during the kind of, these bear markets and red days and red weeks and things like that. Whereas my strategy is basically let the bottom come, let the bottom go, get confirmation of a new trend, and then buy one of the dips that happens afterwards. Yes, I'm not going to get the bottom, but I'm going to get goddamn close to it in my opinion. Okay, so with all that being said, we have our fifth wave structured down here. That is obviously our third wave. The move up here is our fourth wave unless proven otherwise, and obviously we have our fifth wave down on the macro. Now these micro movements, we are obviously expecting to start a move upwards here. Okay, so let's actually bring this up and make this a little bit bigger so you guys can see the recent price action. Okay, so yesterday we saw a lot of FOMO activity after the FOMC meeting, and our fifth wave target within the structure of all of this has to change now. Okay, so the lower that wave 4 goes, the higher that wave 5 has to go. So let's go and tidy this up a little bit and take a look, right? So we have here an interesting structure to the downside. Definitely a complex wave 4. It has to be wave 4 because we haven't crossed wave 1 and we've already met the requirements for wave 3. So a slightly deeper than usual wave 4 movement. However, it is right inside our little yellow box area here where we were talking about previous resistance and potential retracements probably a fair little while ago, probably when this actually happened, which would have been 21st of June, so about a week ago maybe. So we just come back down into this area of previous resistance and turned it into a support level. I think if it wasn't for the FOMC meeting yesterday in the States, essentially we probably would have just broken all the way down from here. However, because of our new low, we can now be a little bit more predictive over what's going to happen next. Okay, our next target is up here, unless proven otherwise. Let me grab hold of this and just adjust it. I probably have to zoom out a little bit because this is all the way over here. So let's go ahead and bring it over. Okay, so our low area comes in down here at $1.05.98. Okay, so I'm just going to adjust this low line to 9.8, and then on the upper side here it's $1.19.32. Okay, so there's a slight adjustment just in there to 3.2 if I can get it, which I'm probably not. Just going to leave it at 3.5. Okay, so that's going to be our 5th wave target. Now that seems like quite a way away, and obviously that would complete a C wave within our wave 4. Okay, so we can see here that we're talking about a 5th wave of a C wave, and that C wave is our 3-wave structured move, the end of it within our wave 4, unless we can go up higher than 130.6. Okay, so there's a couple of nests in there. We have our ABC structure, let me grab my pencil here, 3, 3, 5. Okay, so the first 3 waves are our A wave, the next 3 waves are our B wave, and then our C wave here is a 5-wave move, of which all of this is basically just a 4th wave move. Okay, so hopefully that makes sense. Join us in Discord. I've got some more Elliott wave theory materials if none of that did make any sense, but it's good to understand how these things are structured out. So essentially we have these kind of moves. So this would be basically confirming that the top is in, and then we can move on down. Now, obviously with this recent move, our expectations are here. Now, when we take a look at the momentum behind the price, it's also worth noting, whether or not we think we're actually going to hit these targets or we're just going to break on down. We haven't come high enough to say that we're going to move up significantly yet. However, obviously what we do have is a oversold hourly stochastic. We do have an overbought 4-hour, we have an overbought 8-hour, and a daily that is ready to pump. Okay, so essentially we've kind of got a market that's indecisive. This makes it incredibly difficult. So we've got Elliott wave theory telling us that we should go up unless proven otherwise by dropping down lower than 61.9. Okay, so wave 4 cannot cross wave 1. So we know that if we do drop down lower than 61.9, we've lost our upward momentum, and we should probably start thinking about where we are heading, which would be 14.27 to 23.37. 23.33. So essentially there's a lot more room to the downside than to the upside unless proven otherwise. So if we start to really break down and we lose that momentum, then obviously that's what to expect. Now, if we can, of course, push up on that smaller time frame that is the hourly, and maybe even take our, daily a little bit higher, we might reach these targets between 105.98 and 119. Now that daily stochastic RSI shows that we would even potentially have the upward momentum to take out 130.6 before having an absolute colossal collapse as well. Okay, so there's a lot of variable options here. I think the most probable at this point that we should be relying on, at least for Polygon-matic, is that upward direction within Elliott wave theory. If, however, we do drop down and we drop down lower than our 61.9, then it's a 30% move to the downside. Then obviously we are done, and the upward momentum here at the absolute most would be 35%. So there's definitely a bit of an imbalance going on here, an indecisive market that's not ready to make a decision. So caution. Essentially, I would be sitting this out, waiting to see what happens next. I think I'd rather see confirmation of one of these, and then I'm not going to short the market, but you would basically look at that as a much bigger kind of move of 64% you'd hit when cross down lower than 61.9, rather than just look at that 35% pump to the upside that could be wiping you out very, very quickly. I think limited upside, a lot more room downside, unless of course proven otherwise. So I do think there's a room to grow here on the smaller time frame. We're just looking to really hit 105.98 to confirm that we're done. It doesn't really have to go any higher than that. On the upper side though, 119 would be nice. Ultimately, I do think we have a lot more room to the downside, as we are yet to invalidate any further structures that are going to indicate that we are more bullish than bearish. Now, when I throw on the volume is also showing us, kind of what's going on. Let me just bring this up here a little bit. So we can see that there was a pump yesterday with some green volume, but it was kind of like a one-off or 1 hour kind of scenario, then just dropped back down. And right in here in the middle, there's a lot of selling pressure. Other than that, the volume is really there. There's not a lot of volume to really keep us pushing on up higher. And hence why your stochastic is kind of a little bit all over the place on the different time frames. You take a look at the 4 hour, we were kind of growing as we were dropping back down. We had that spike in volume and then nothing afterwards. On the 8 hour, the same thing again, right? The volume was dropping as we were dropping, giving us a little bit more room to see a bounce, but then the volume hasn't come in to really take it up as you'd expect. On the hourly chart, on the daily chart, let me bring this back in. All you're really seeing is the price pushing up here within this C wave and the volume just decreasing. You can kind of see that. Let me just pull that in here, for example. You can see that the volume is decreasing. Even if we were to try to take it from this kind of standpoint, we still end up with a decreasing volume as the price is pushing on up. And that is taking some of these really high levels. We can take a look at it from just the anomalies within this structure, and we can say the volume's been increasing from the spikes of volume that have been coming in. But if you were to ignore the spikes in volume and just look at the kind of the mean and the average, it would be indicating that we're actually moving on down. So I think essentially the volume is not supporting the move upwards, and therefore there's a limited range to the upward direction. But what I'm hoping for here is that Elliott wave theory has plotted the path to finishing off this corrective structure within wave 4, and then we can move on down into those lows in a really confident way. So guys, I am going to leave this video right there. If you found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.